everybody. Let's go ahead and get started here. Um, Welcome if you're new. If you are new to these webinars, we are known as pretty much a full body research shop. I mean, we cover extensive fundamental analysis that really dictates where we go in terms of buying and selling. And we use technical analysis to gauge risk within the broad market as well as to identify areas in which we plan to buy and sell. Um, and so that's what we're doing here is we're just basically taking a look at the visual charts and identifying targets and identifying risk. If you're new to technical analysis, we have an entire section dedicated to this on our website, and I'd be happy to show you where that's at. But in this video, we're going to kind of stick to our standard format. We're going to cover the broad market, go through various markets, show you the risks that I see, both to the upside and the downside, and what our game plans are. And then we're going to go through various stocks as well as crypto to kind of let you know what our game plan is based off of these scenarios. So S&P 500, this is a 4-day chart. Every bar represents 4 days. This has been one of my go-to charts for the intermediate time frame for the broad market. I track many markets, but the S&P 500 to me is the balance beam of global markets. And so that's why I spend so much time on it. But since the 2022 low, we've been in these kind of overlapping, as you follow my cursor here, just overlapping moves. They didn't feel like it in the time, but they've been very overlapping and just, kind of messy moves. Usually when a market just trends in a certain direction, like we have been recently, that's usually what a 5-wave move feels like and looks like. And if you can compress the last, 3+ years, it hasn't been that. It's been this just kind of mess of a move in both directions, huge swings in both directions. The only pattern that fits this is what's called a diagonal. It is a 5-wave pattern that has strong overlap. In other words, the fourth wave will go within first wave territory, and it tends to trend within a trend channel. They are the first move in a trend and the last move in a trend. They can be. That's where they show up, right? You never see them in the middle of a trend ever. That's your third wave. So the question is this a leading diagonal? Is this the start of a new bull cycle? Or is it an ending diagonal, which is the end of a bull cycle, that bull cycle starting in 2009? My analysis and thesis has been for many years that we are in the ending diagonal. It just fits too well. Excuse me. It's just it fits much better within the bigger context. And so the question is, how big of a diagonal is this? And that's what these basically are accounting for, these different scenarios. The red scenario says that we topped in February, right? And so what that would be is 1, 2, 3. The third wave is July of 2023. The fourth wave is October of 2024, excuse me. Is that, or 2023, excuse me. Then 2024 to 2025 was an extended blow off fifth wave, right? And then we had an A wave down, the first drop in this correction into April. And this has been what you call a very large corrective bounce. Usually a corrective bounce and a correction like this right here, that's a corrective bounce, is a 3-wave move that retraces most of the bounce but fails below making a new high. This one has made a new high. And there's a type of correction called an expanded flat. I don't want to get too much into jargon, which is where the corrective bounce goes above and makes a new high. And what follows that is a very aggressive direct C wave, the final third drop, that tends to go far below the end of the A wave. What that would mean is if this corrective pattern is in play, we would see a very aggressive drop, take you below the April low, targets in the 4,300 to 3,300 range. I don't like showing these kind of extreme setups. The problem is that the setup is there. The pattern allows for that setup. Just like right here, where we had in 2022, we had this overlapping drop right here. That would be your A wave. And then from 2022 on, we had an A, B, a three-wave move up into the 2023 high right here, making a lower high. This also allowed for a crash setup, which is what this is. Now, obviously, it didn't take that, but I was definitely very loud about this potential because it's not very often that you see crash setups in markets. They don't show up very often, and that's what this scenario is talking about. How this would become an early warning sign would be whatever drop we get once we break support and we're in a correction, which will happen. The pattern will be a five-wave move, an aggressive five-wave move. We'll get five waves down, then three up, and then we'll see a really aggressive drop. Ultimately, the final nail would be a drop below 53.45. Okay, this is a long ways away. I don't think this is ideally what's playing out. This would require some kind of a black swan event, not really an investable strategy, in my opinion, especially with some of the stuff we're seeing going on in AI. So what I think is playing out, this is the most probable scenario, is I keep in mind we're actually in an ending diagonal. Instead of this being one, two, three, the first wave ended in July of 2023. The second wave was October of 2023. And then what we had since up into the February top was the third wave, fourth wave, and now we're in the fifth wave. Now keep in mind the first wave lasted from October 2022 all the way until August of 2023. It's almost a full year. So to say that this is all you get, it doesn't, the symmetry doesn't work out. So what we get is everything we've been in since the April low has been the A wave. We'll get a B wave drop back into, I think, minimum 59.20. I wouldn't be shocked if we go down to 5,500 based off how these B waves play out. And then we get a final blow off into 2026, targeting 7,200, somewhere around there. Who knows? It really, once we get the drop, we'll be able to determine the targets. I'm adding this blue count here, which basically says that that tiny little drop we had in May of 2025 was the B wave. And now we're in the C wave, which would give you a more direct line towards 7,000, 7,200, probably in October. What that would mean is we get a tiny little drop that holds 6,200, and then we take off. The reason that I'm showing this, keep in mind, when I say I work in probabilities, these patterns are very similar across the spectrum on all markets, all time frames. B waves, they act like second waves. They tend to retrace at least 30% of the A wave. This didn't even retrace 20% right here. It was so tiny. However, that actually happened here in late 2024. Believe it or not, this direct line right here, this is a three-wave pattern. It was five up, very tiny three waves right there, then another five up. And so this was an example of that scenario playing out. Extremely rare, improbable in terms of how these patterns play out, but I've never seen one this small in my life until it happened. And so that's why I'm putting this in here. Once again, it's rare, it's improbable, but it happened in 2024, and so I'm putting it here. And so our game plan, which I'll get into, is really the game plan for these two scenarios, the green and the blue. Two things I'll point out: the higher we move, the lower volume gets, the less excitement there is about prices this high. We're seeing buyers dry up. There was the Bank of America's survey of fund managers that just came out, a report that surveys all these fund managers. It's the lowest cash position they've had in 12 years, 3.9%. So you got to think to yourself, well, if a market is supply and demand, if cash is already in the markets, where's that cash going to come from to keep propelling stocks higher in a vertical fashion without some kind of a pullback? And that's what this lower volume is telling you. The composite index continues to show feigning momentum the higher we go. And the RSI has paused at the bear market resistance line. So in bull markets and raging bull markets, this line gets broken, and then it tends to really hover in this range, right? On these really strong markets. However, the reason this is the bear market resistance line is a lot of meaningful corrections start from this level. This is a level you got to break in order to say you're in a bull market. And so we're right there. So anyway, I still think the risk is high. This market continues to extend. But we did get a key reversal today. And for those that don't know what that means, it's basically a market that gaps higher and then closes on the lows. Um, and so what you would call this candle pattern is a bearish engulfing pattern. This candle alone engulfs one, two, three, four, five, let's see, 5 trading days. It engulfs it. And it did so on pretty elevated volumes. So the lower volume started to kind of fade into this key reversal. Now, key reversals, um, most corrections start with key reversals. There's another one right there, then a gap. They happen all the time. They don't mean that it's going to be the start of some monster, bear market. We have our levels to watch to dictate what that would look like. But this is usually how pullbacks start at these key reversals. So, however, we have not broken support yet. And that support has been raised. 6290, we have to break below 6290 for the first indication that some kind of a pullback is in. The second and final is 6200. Below 6200, and the odds are very, very high that we are in a correction. Considering this is a three-wave move, 1, 2, 3. It's an extended three-wave move, but it's still a three-wave move. That's your A. The B wave tells us, based off probabilities, that if we get a three-wave pullback, it would take us back to 5,700 would be the minimum. Typically, and a very shallow one, the 23.6, that'd be 6,000 right there. It's a very shallow B wave. Very rare to see a B wave retrace only to the 23.6. So that's why I have 5920 as my, that's a pretty strong confluence zone. And so that's why I have that as my minimal target for this move. Okay, so keep those levels in mind. Until support breaks, we can keep drifting higher. We just can. But I think we're kind of getting the clue. I mean, we had a huge liquidity event, liquidity event in terms of like gapping higher on excellent earnings and then just seeing institutions sell into that. The other thing I want to point out is the cycle work that I do. And these cycles help us get on the right side of February. This is my monthly chart. It tracks big cycles, like the big moves, right? Not like, 5% corrections or anything like that. When they cluster, it tends to matter. The only cycles I have for this year were in February, which was the big one I've been warning about for a while. Now we have kind of late July, August. These are monthly charts. So you got to give them, July, August, a 2-month time frame. And then we have kind of your September, October months right there. There's only two big cycles. So we're trending up into this one. We're in the middle of it right now. If we look on a smaller time scale, I've been pointing out smaller windows, which all of them have marked minimal turning points. Like, for example, the mid-July was just a pause in the market. We saw some markets top and diverge. Late July, very minimal once again. But all of these kind of identify these tiny turning points. What I do is I go to the big cycles. Okay, it's telling me July, August is a big deal. June, July kind of ish, early August. And then I look for my kind of smaller windows. And the next one is right now, August 1st, August 2nd. July, kind of, I give it a couple days on the other end. So we're in it right now, and we're at a major resistance level. The next one coming up is going to be August 5th. I'm just kind of coupling it all together. And then August 12th, August 13th should be a big one. So those are the ones coming up in August. So anyway, the way that I use this analysis is that if we don't top into one of these, like say that we move past August 5th and we haven't put in a top, support hasn't broken, that means we're probably going higher. I would say the strong vast majority of the time, 95% if not higher of the time, we top within one of these windows. So that's how I use that analysis. So anyway, we're in one right now. We've got a key reversal, and we're just over support. Furthermore, the divergences we're seeing in key markets is quite high. The equal weight S&P 500 making a lower high against the S&P 500. This is more of a economically sensitive version of the S&P 500. Small caps topped here in late July. The S&P pushed higher. Semiconductors topped yesterday, right? S&P made a new high. Semis did not. This is a pretty big one. The advanced decline line is a measurement of breadth. It rarely diverges from the S&P, and it's doing it right now. The VIX, believe it or not, I just inverted the VIX. Usually it's, it goes when it goes higher, volatility is higher, but I did it just for visuals. I inverted it. It actually made is diverging from the S&P. So it's not confirming this move higher. Financial conditions also not confirming this move higher. And then transports, they topped in early July, not confirming this move higher. So the only ones that are confirming it are the equal weight Mag 7. However, if you look under the hood, there's only three Mag 7 pulling their weight. And that's NVIDIA, Meta, and Microsoft. The rest are either consolidating under their 2024 highs or in an active downtrend. So there's just not a lot of breadth here. This is the kind of these are the kind of signals you see before corrections as well. Furthermore, if we look at the internals, I use metrics by Wealth Umbrella. I think they're some of the best in the business. This is they're overheated, their kind of margin indicator. It hit a number 13. Very rarely does it hit that. I think since 2009, there's been like over 4,000 trading days, something like that. And only 50 of those days had a reading of 13. It usually happens like kind of right before you start seeing a pullback. The other indicator I use is the flow of options within the options market. It tends to lead the stock market, and it just gave us a sell signal. Breadth, as you've been seeing, has been deteriorating the higher we go. And the skew, which is options positioning, out of the money, put options basically to, defense, is at a pretty high level. You wouldn't think that if you look back here. This was all-time highs, but this red line, very rare to see it go over that line. Very, very rare. I mean, going into, where was it? 2020, where were we at right here? Look at that, going into 2022 sell-off. It made it to like 155, and we're currently at 155, so lots of room for this to go lower. So the internals also are weak, in my opinion. So anyway, just wanted to point that out. We've been harping on this for a while. This market's getting riskier and riskier. We're kind of in the middle of a rebalance. We're starting now. We're taking some really excellent gains. Hope everybody's enjoying those. And we're actually starting to build slowly other positions that we want to own into the back half of 2025. My base case is that we see something like this, the green count that I've been tracking, which is that we are going to see some kind of a pullback probably into September, October. Probably going to take us lower than people think right now, maybe even closing this gap around 5,700. And if it's a three-wave move, you're going to see us put the rest of our cash to play, take off all these hedges, and prepare for this kind of final swing into 2026, which lines up with some of the AI stuff we're seeing. However, on the other hand, if we see a vertical drop 5 down, 3 up, we're going to be a little bit more cautious on how we position. But if we see a tiny little drop that holds 6,200, then we get another 5 waves off that low, then we're probably just going to take off our hedge and start positioning for this move to 7,200. So that's the game plan that we have right now, just very all-encompassing, trying to get ready for whatever the market throws at us. The thing about the market is that it is the ultimate leading indicator, and this type of analysis can kind of help identify what those next moves will be.